it's Matthew from the Daily Trade. So I'm going to go ahead and talk about what we're going to be watching today. I am doing this pretty early in the morning for the watch list. I just wanted to make sure and go through everything because it was a little bit messy, and it's getting messier almost every day with the Iran news. So we're trying to figure out what is the best strategy to actually go and move forward with this. And that's where sectors come into play, and that's what we're going to be doing over these next couple of days, is actually monitoring and studying up the sectors that are affecting movement. And so we have to pay attention to this as a big part, and it should be something that you actually look forward to in a trading day. But you also want to make sure that you're analyzing everything you can and using all the resources you can available to you. And being able to look at sectors in different ways is a lot better than, scrolling through like 10 different stocks at a time. If you have like the same type of stocks in the same sector, then you're going to get like messed over. And you should have at least 5 in different sectors. And so I just want to announce as well is that we're going to have a sector watch list inside our watch list every day now, as well as a sector spreadsheet available to you guys this weekend. So you'll be able to look at that and go ahead and just go through that, pick a couple, and just work on those and study up on certain stocks that you can analyze the trends, you can see and study them up. And so that's the gist of that real quick. So let's dive right into it. So today we're having Roku. This is part of the consumer discretionary sector. They missed the rally yesterday, and we're watching to see if they will pull up, as they are a little bit below. I think it was below the 200 MA, and I just want to go through that real quick. So we're looking at the 200 MA, and they're getting there, decently getting there, and it's getting closer and it's getting tighter. So we're watching this as today could either run up to a 138 level here or even push higher. So we have to make sure that we're watching everything, and it is pushing against this pivot point right here, as we have outlined. And so we just want to make sure that we're checking everything we can and being able to analyze this in a way that will help us and be resourceful. And it's not bad to just watch a couple stocks. Yes, you might have the fear of missing out, which is FOMO, the fear of missing out with a couple other people making profits on other stocks. That's okay. As long as you know what your intent is in a certain stock, you'll be fine. As long as you are watching the stock and you're able to analyze what is happening with that stock, you're fine. Don't jump into some other stock because people are in it and you have that fear of missing out. You're going to lose money on that, definitely. So being able to just stick with the plan, go with the stock. Like if you're looking at Roku, let's say today, you want to make sure that you're going to be able to, all right, let me analyze this real quick, and let's see. Okay, I think it's going to go to 138. Okay, that's based off the 200 MA, the bunch of other movers, and you can see a squeeze right here as well between all the moving averages. On the 8, the 21, and the 50, you can see there's a huge squeeze right there. So this could easily move today. And so we want to be on the lookout for that, and looking at the calls at 136 level would be perfect. And that's where the 200 moving average comes in as well. But you want to make sure that you have a plan and you go into it and you just focus on a couple stocks a day. You'll be fine. And being able to be consistent with that, you'll be able to pick up the trends that go with that stock and sector as well. So that's a big one today is Roku, as they did have a 5% decline yesterday. So we want to make sure that we're, I think it was 5%, right? Let's check. What was it yesterday? Yesterday from the highs, I was, no, never mind. I'm wrong. Yeah, it was a 2.5%. Sorry, not 5%. 2.5%. But yeah, so we're going to be looking at this today. This is an easy squeeze. We want to make sure that we're paying attention to that. So let's move on to this. Next one, which would be WWE. And I talked about this a little bit in the charting analysis channel. And this is where, oh, and it did it. It easily. You can see this inside the charting analysis. I talked about it. What is it? Let's go in here real quick. Charting analysis, looking at the January 17th, 65 calls at $75. So we're looking at those. and that was posted at 1 a.m. My time. And look at it's this was posted. Wow, when is this posted? 12:05. Oh, I guess it is. Did I even see this? I do not know. Anyways, this was a perfect setup just because you could see the bullish divergence. You're seeing the lower lows, and then you're able to see the higher lows. So you're seeing the higher lows here on the actual MACD and then the RSI. So let me actually fix this because it was farther out earlier. So you're able to see that, and that's a perfect bullish divergence for WWE, and that would be a perfect one to actually get into. Yesterday, getting in at the bottom, it's no biggie, but you could easily see this thing run up all the way to the 200 moving average, and that's where your 8-day moving average, which is the strongest and the fastest, is where it comes in. It's another squeeze, right? You want to pay attention to these, and I will actually show you how to set up everything, and I'm going to give you a full tutorial on the trading view later this weekend, so you'll be able to actually look at it. So you can be in on the same plays, you can be looking at the same thing, you won't be able to miss out on anything, because I want you to be successful and actually get into good plays and have everything, all your technicals being able to work out. There's a lot of stuff that goes into it, so being able to get into the stuff and know what to look for is a big, huge thing. All right, WWE CRM. So CRM is part of a perfect buy opportunity if we continue the trend. And continuing the trend means we have to push forward and pass a good hard resistance right here at the 178.55, 178.78. That's where it was yesterday. And it's possible it could continue the trend. It's a hard move. CRM is not that hard to move. There just has to be enough volume, and you'll just kick in. So that's something that to be on your watch list. The contracts usually move pretty good and decent, and they're cheap. So that's another good one to get into. Tesla, we already know Tesla. Everyone knows Tesla. There's going to be a lot of resistance at this 500 level once you get into it, because that's where everyone's marking. So if you scalp something today on Tesla, obviously it's not always good to get in at tops or not even see a trend before you get in. But if you get in, and I'm not telling you to get in, but if you get in your 500 level, what I like to do is just get in and get out. I don't like to wait all the way till, I'm being greedy or it gets to the 500 level. If it gets to the 500 level, that's cool. I missed out. Not a big issue, because I didn't want to risk it. So like, let's say it runs from the 490 level, and then it pushes. Maybe I'll sell at the 498 before it gets to that 500. You know why? Because all the big sellers are going to be selling at the 499 level, and then it's going to still push to the 500, push a little over, and then boom, drop down. And it could do that. Yes, and that's a huge thing that is always happening, is people wait till it gets to the resistance. No, if you want to wait till it gets to resistance, fine, but you might lose out because people already sold the candle or two behind you. So you're pretty much missing out on your take profits moment. And that's where a lot of traders will miss out, or lose money, is because you're being greedy and you expect it to continue to rise even past the resistance. And that's not always the case. There's technicals and there's people that are selling. There's people that sell just to scare. And you'll see that like right here. You saw people probably get scared, sell off their options, and then they got mad because it went back up. So, or this point right here, people got scared probably, and they didn't expect it to move up. So there's a lot of selling points that will actually get people, and that sucks. But you have to learn how to look for these and stick to your technicals. Have a stop loss. You should be able to look for this throughout the day. Moving on, PayPal. So PayPal is a great setup. I've been talking about this for a while. PayPal is an amazing stock, and moving into earnings later this month. I mean, obviously there's a bunch of earnings this month because it's a huge earnings season, again, like October. But we're going to be looking at this because PayPal is always a good setup. It always has that potential to continue to rise, even on low volume, and not a lot of news. There's not much news that comes out with PayPal yet. It's just a stock that you want to get into because it's so they're cheap contracts. First of all, the trend is usually there, and there's not much news affecting it, so that's a perfect time to actually get in. And sticking to the technicals, you could easily see all the technicals are usually right. Usually stick to your technicals, and it goes according to plan, right? And that's where being able to look out for this stuff is a huge thing in trading, and it's going to help you in the future. So being able to stick to your technicals and get through the trading day is a huge one, as well as getting through this as well. There's a hard resistance right here, as you can obviously tell. A short resistance, not a hard resistance, sorry. It's a 112.64. Obviously, it sold off just because of everything else selling off at the end of the day yesterday. But today, there's a huge rally that could possibly happen again, or just a sell-off at open. But we have to make sure that we're watching everything. Pay attention to your S&P 500, your NASDAQ, your Dow, depending on which sector it is and where it's in. You're going to want to pay attention to that. Shopify. We haven't seen much movement on Shopify in the past couple of days, so we want to make sure that we're paying attention to this one as well, because there's always a potential to run up, even based off nothing. Shopify is just that type of stock. You're going to see this thing run up on nothing, just like Tesla. Shopify is a huge one to actually make some money. Contracts get cheap, and then they get expensive real fast. So being able to get in on these early is a good thing. But pushing towards the 420 level is where it's going to be at. And yesterday, you can already see, let me hide this real quick. You can already see it push to the 422 and drop. But being able to pay attention to that, you want to be moving forward with seeing where you're going to see this long term. Because if you go long term, let's say in a 15-minute, you can easily see that it needs to move with the 8 moving average, and it's still above that that 20. I mean, right below that 21 moving average. So if this 8 moving average moves above this 21, you're going to see this thing start moving, and we're going to already see the MACD possibly pushing up, and RSI is barely at 52. Yes, it's a little more than you should be getting in it, but it's still a good RSI, not overbought. So you're good to actually get in at this point. But here's another thing. The market today might actually have a dip early in the morning and then just move off that just because it hits their support levels. And their support levels are going to be huge today. So being able to check that out and not get scared and just buy puts out of nowhere, that's going to be another thing. It's just not getting scared, not running with everyone else that you see on StockTwits or Twitter or in other chats that you're in. You just want to make sure you're in your own mind and being focused, and try and do some plays on your own. That's where we're looking at too, is because being able to see this stuff and get into it, that's an awesome accomplishment, and you'll be happy to see that after you actually make a good trade off that. SPY. So we can already tell SPY has been moving all night. SPY obviously dropped down yesterday after hours, and yet it came back up because it's SPY. You never know what's going to happen. Literally, people will lose money because they anticipate what it's going to do. I lost money on it. I gained money on it, but it's always a risk, and that's why swinging SPY isn't always the best idea. And I found that to be true. It's not the best idea for me. I would never swing SPY again, and it's just a huge thing because SPY is affected by many things. So seeing that, we're going to see this resistance right here at the 26 level, 326. You could see a dip and then bounce back, and that would be a easy pattern to catch. So you just want to be paying attention to that as well. Amazon. Now, I talked about this all day yesterday and today, early in the morning. Amazon yesterday closed at about 1892, and then came back up this morning on very low volume to the 1906, 1907 level, and now we're at 1905 currently. sitting, and so seeing a possible 4% run up is maybe possible, right? We haven't seen a big move on Amazon in a while. It keeps testing this resistance. There's enough and there's not a lot of bad news or anything to actually make this dip. There's a huge squeeze right there, as you can see, but we've just been waiting for something to push it. And Amazon yesterday didn't really move with the market. You could easily see Amazon move today just because it hasn't moved yesterday as much as it should have. So being able to see that, all right, which sectors weren't moving yesterday, which sectors could move today, that's another big thing. So Amazon, you could easily get something very cheap, possibly get a little bit of profit off it. But if you don't want to play Amazon, obviously you don't. But you could study the trend, and that's what it's about, and that's why I'm showing you as well. Facebook. Oh, why did I put Facebook on here? So there was the bearish divergence, and I can talk about that just real quick. So there was a bearish divergence before, and then it just popped off because Facebook is awesome. It's moving with the rest of the market. It's popping off. When we did talk about it, it was around the 2.9 level. Didn't really have the the support we needed, but it broke out, and just like the rest of the market, it broke out. So you could potentially stay with the bullish, but I accidentally left this as bearish divergence. So don't even worry about that. Other than that, if anybody has any questions, go ahead and comment in the YouTube comments below. Like this video, subscribe, because obviously we're going to have more of these, right? And also have that tutorial this weekend. And go ahead and check out the main chat by clicking the link in the description below. We are here most of the time uploading videos every week now, starting in 2020, which it is. And I just want to give you guys a 2020 good luck. So go ahead, guys, follow, and see you guys in the trading world.